What's up, guys? Welcome to a new trading recap. I'm still in this Bitcoin short from the last video. Let's jump in. Actually, I only took one trade after the last video. That's why I didn't upload any video. And so basically, I tried a little scalp on Bitcoin right here. We had a little very low time frame model, and basically the idea was we had this whole weekend liquidity beginning on Friday PM and building up the whole weekend till up here. And I was initially watching this. I was watching this range initially. And we deviated, but then I saw this range and it was for me very nice, building up here, and we had here this big inefficiency. Here was a little breaker block, we front ran. We had here an order block and here a more refined block, which we don't have to mitigate. It's not necessary. We have here the fair value gap, and it's sufficient when we just tap into it. So yeah, basically this was a nice model. Recapping it, I have to say, in the moment, it looked clean because I took this 1, 2, 3. This was my 3 tap, my Wyckoff Model 1. Here we had some really sketchy price movement, but here we had our 1 minute breakoff structure. I waited for the level 2 breakoff structure and entered here, right about here. And yeah, basically we had here a little supply block. We went into it, got the rejection, level 2 breakoff structure. What is level 2 breakoff structure? This is our level 1, which broke to bearish right here. And this is our level 2 breakoff structure, which we broke here. So I was very confident in this moment that we will get the rotation back down, but immediately after coming down, we kinda got a little accumulation model here. Nothing I would trade, but this was a little model. 1, 2, 3. We broke back to bullish right here and went up again. What I did, because I did not want to exit manually, I just traded my stop loss after we grabbed the liquidity right here. I trade my stop loss till here, and yeah, basically got stopped out for a 0.5, and I only risk here on a 0.5, so basically I lost 0.25. This was 0.133, and here was 0.077. So yeah, basically this was a trade. I could have entered again right here after this break, we went down, broke level 2 right here. You still have to put your stop loss above here because we did not mitigate anything. But I did not re-enter. I was in the gym and actually did not look at this trade after trailing the stop loss here and got stopped out here. I went to the gym, and when I came back home, I just saw the price going down. So yeah, this was a trade just to clarify, just for transparency purpose. I want to show losses too, obviously. So yeah, this was a trade on Bitcoin. Now we have a new range going on here. Let's see what we can do. This is our weekly low currently. This is our weekly high. We are in the last week of December. Yeah, and basically this is a bigger range. We have deviation 1, 2, and no deviation here. We have a big, nice supply above us. So basically, but this would be asking for too much. If we could get something like this, a move up like this, coming down, and then targeting the next round to 74k. But basically, this could distribute to go down to maybe do something like this, go down, accumulate, make a new range, and from here maybe it wants to distribute. Yeah. So lots of ranges going on here. So basically this is our range. If we get this distribution, maybe we get this mid-time frame accumulation. This mid-time accumulation could be our distribution to go to the second round till 74k. This is basically our technical target from this Wyckoff here. So yeah, this was a trade on Bitcoin, 0.25 loss. It's part of the game. It doesn't matter. And then we have Sol here, Solana. We are kind of accumulating, but it's counter context, even though it is on the discount of this range, it still is pretty much counter context because Bitcoin is more bearish than bullish. And if we come down here, we actually can look at something like this, where Solana comes down, mitigates this supply, which it front ran back then here, and maybe accumulate from here in 2026, coming out of the bear market, who knows. But let's just review this trade. I was looking at this range. This was again a weekend range, starting the first step here on Friday, and the confirmation was Monday PM in the New York manipulation hour. So this is a trade. Wait a moment. I have the P&L shot here. I hit the TP. So yeah, basically we had here our model 1 distribution, and we had, this was a bit sketchy because this was just sideways price movement, a tap down, a tap up, tap down, and then we got kind of this liquidation thrill up. Seems like trendline liquidity somehow. So yeah, we had this range going on, and there wasn't a really nice Model 2 POI, there was on the tip of the iceberg here a little supply block, nothing special. And we had here some kind of triple highs stacking up. We took them, oh no, 4 highs. We took them out here and took out, I think this was a news candle. Looks like a news candle. Oh no, it was exactly on New York Open. Yeah, this was exactly on New York Open. Little sell, buy on a low time frame. And often New York manipulates in the first hour. So basically, there wasn't a really good confirmation here. So you wouldn't not have gotten trapped. Looking here, the structure from the low up. So we can identify a breakout structure. We had a low, a high, lower high. And here we SFP'd the low, went up, went down, went up again. We could have here entered, but yeah, you would have gotten trapped. Maybe this is one of the times where you take the L before the W, but I did not enter here. This was at midday, okay. Because we had a good looking, or not nothing special, but we had a supply. And if there are POIs, I preferably want the POI for Model 2 to surpass the tab 1. So I did not look that much on this liquidity. I put more attention on a deviation of tab 1 and the POI above or exactly on tab 1. I take a sip of my coffee. So yeah, just a little nugget here. Always take the POI above tab 1 or exactly at tab 1. So yeah, basically we had the little New York opening manipulation, and this could have been the tab 3 for Model 1, for Model 2. We had a high, lower high, lower low, lower high. Higher high, higher low, higher high, sorry. And we wicked it and closed right here. This could have been the breakout structure again, but I did not enter. I like to enter like on a little retest, and after seeing this candle going inside of this order block, I wasn't interested in trading the backtest. So I was waiting patiently again, and here we had our structure. Is it an inside? Yep, this is not valid structure. And here we broke market structure. And this was personally for me more convincing, because I don't like to trade this New York first minutes pump and dump. This often just grabs liquidity on both sides and then starts the manipulation. And here you can see New York opened right here, and this was like nearly in the first hour, right? This price action was in the first hour, and I often like when the first hour is ending then to enter a trade. So yeah, basically we had here our breakout structure. We went up. We had, if I remember correctly, yeah, we had here a little order block. And yeah, basically I think I entered here. We broke, got the rejection, and the way we built up this liquidity, this was trying to get taken, really. So I entered above here, right here on this spot. I still had my stop loss above this point, because we could have done still something like this and then went down. So this should be protected because it's a Wyckoff high. And after breaking this low here, I trailed my stop loss to this high, to the retest high. Went to sleep. And yeah, this was a nice, I think it was, 3.8, 3.9 air trade. So basically you could have targeted this block, but yeah, this was really just for me an in and out trade. I did not want to really enter that long on this trade, because as you can see, often this happens. If you think this could have more follow through, we are here in a potential accumulation, and you don't want to hold this way down. But you could have maybe targeted the low here for a bit more profit. But yeah, I just took my 4R went out, and yeah, was happy about the trade. So yeah, this was a trade. The next video will come up when I took new trades. I did not take this hype setup, sadly. This was very nice. We have the exhaustion going up. We have a naked low. This low did not swap anything here. And yeah, initially I was looking at this range from here to here. Here was a model 1, but this looks more like a range for me and not this. So yeah, I was looking at this range, and looking here, we had a very sketchy breakout structure. I don't like when you have to travel that much to just break structure, and it broke it one candle and shot back up. So I was looking at level 2 breakout structure. Again, level 2 breakout structure is when you go down, up, and you break here. I wanted to enter here, but actually I did not enter, because I was like, we got a 5-minute order block here. Maybe we want to mitigate it and then get a better entry, maybe here. And after coming down, I could have trailed my stop loss to here and basically be risk free. If I would enter down here, there's not really an opportunity to trail my stop loss. So basically the price have to go like this, and then I can trail, but I still have to risk like 60% of my risk. And yeah, I don't like these type of trades, even though this was a nice, well, it was a 3% gain. Maybe we get a rejection from this little friend here, a 15-minute structure block. Seems like this whole thing here is a structure supply. Maybe this would be a nice trade too, if we can come down here, maybe move up, get in here and reject. And then I actually would enter here on a more refined entry. Maybe we reject from here. This seems to be, I really like this POI more than this. This is our structure supply. And in our structure supply, we have this buy to sell with an inefficiency down here. I really like this from a re-entry perspective, like this, coming up, leaving some sort of lows that stack up here. And yeah, and then enter here. And guys, really, sometimes you can actually make more money trading the retest on a good looking supply, targeting lower, than actually getting the pivot point exactly on a range high. And here, as I said, you can actually target down here. So what I would do, if this would be actually a 7-hour trade, I would like, maybe, let's say you risk 1K on this trade, you would have made 7.5K. You can just basically like take 10%, 20% profit down here. So you realize 1.5K and your position decreases from 1K to 800. So basically you you have like 700 guaranteed profit on this trade, but you can target way lower. So basically you get $800 multiplied by 22. It's like 6.6K with this trade. Beautiful trade, and this really can go lower because there's nothing here that could keep price up. Nothing. This could be a pivot point like this or like this. Yeah, just a little pre-planning here on this trade. Yeah, so this was trading recap from this week. Thanks for watching, guys, and see you in the next video. Bye.